Welcome to the Explainer. Have you ever noticed how the way we interact with our money, our shopping, or even our insurance is just quietly shifting? It's not just that we're getting slick new app icons on our home screens. The entire consumer finance interface is fundamentally changing right under our noses. And honestly, most of us haven't even realized it's happening yet. Okay, remember in the movie The Matrix when Neo finally sees that glowing green code underneath everything? Suddenly, he just gets it. He understands how the whole world is actually constructed. Well, that is exactly what's happening in financial services right now. Recent moves by three major companies have essentially pulled back the curtain for us, revealing the invisible infrastructure that powers our everyday financial apps. And as you'll see, once you understand how this new stack is built, you really can't unsee it. Check out this incredible quote straight from our source material. AI isn't coming for financial services, it's already running the front desk. We're not talking about some distant hypothetical future prediction here. This shift is a reality right now. So today, we're dissecting three massive industry moves that are fundamentally rebuilding this financial stack from the bottom up. We're going to look at how money moves, how products are found, and how services are sold. Okay, let's dive right into this. Layer 1, the foundation. This is where Plaid builds the stack. So if you've ever used Robinhood, Coinbase, SoFi, or Chime, you are already using Plaid. Your favorite fintech apps? They're really just the storefronts. Plaid is the operating system running underneath the whole shebang. They're essentially the AWS of fintech. But here's the thing. The old Plaid was mostly known for simply connecting over 12,000 financial institutions. They already touch more than half of all US bank account holders. But the new Plaid, they're aggressively shifting from just connecting those accounts to becoming a full-blown multi-product infrastructure platform. Right now, they're guaranteeing payments, scoring credit, and fighting fraud at a completely unprecedented scale. To give you an idea of how fast this is moving, Plaid's CEO, Zach Perret, just dropped three massive new products. First up, guaranteed payments. This evaluates ACH transactions in real time, approves them in literal milliseconds, and here's the kicker. If it approves, it actually guarantees the settlement. If a payment fails, Plaid just eats the loss. No way, right? Second, they've built on Signal and Protect, which scans over 500 million linked accounts to fight fraud. And third, LendScore. This is a cash flow credit risk model that delivers a 25% lift in predictive performance over traditional credit scores. Because of this rock-solid foundation, early customers are already hitting 90% approval rates on instant funding. Now, what's really interesting about this slide is the sheer scale of the business behind that infrastructure. $546 million. That's Plaid's estimated annual recurring revenue for 2025. They are up 40% year over year. And get this, they're actually profitable. Following a February 2026 employee share sale, they're valued at $8 billion. Sure, they took a bit of a hit a few years ago during the rate hikes, but they've rebuilt into an absolute compounding machine. And they're doing all of this without a public ticker or quarterly earnings calls. All right, moving up the stack to layer 2, the discovery engine. Here's how Klarna moves up the funnel. So Klarna is no longer waiting for customers to stumble upon their app. Instead, they're basically ambushing the consumer exactly where they already hang out. Think about their old strategy. It was all about owning the checkout. You'd shop on a retailer's site, and Klarna was just that convenient pay later button at the very end of your journey. But their new strategy? They want to own discovery entirely. Klarna recently launched its shopping search app directly inside ChatGPT, as well as Google Gemini and Google Pay. Just to put the sheer scale of this integration into perspective, Klarna is plugging 100 million products and 400 million merchant listings straight into a platform with 700 million weekly ChatGPT users. Across 13 different markets, consumers can now just describe what they want using everyday natural language and get live prices and availability without ever leaving the chat interface. It's wild. Klarna intercepts you the moment before you even know exactly what it is you want to buy. And hey, if you doubt the urgency of this AI commerce race, well, this growth curve tells the real story. During the 2025 holiday season, AI referral traffic to retail sites grew by an astronomical 700%. But more importantly, those AI-referred shoppers, they converted at 31% higher rates. So the race to own that AI commerce layer isn't some hypothetical whiteboard concept anymore. It is happening right now, and those conversion rates absolutely prove it works. Let's move to and see how this builds up to our final layer, layer 3, direct distribution. Liberty Mutual reinvents the quote. Okay, so Liberty Mutual, which is a top 5 U.S. property and casualty carrier writing roughly $50 billion in annual premium, just quietly reinvented how the insurance quote actually works by testing a full ChatGPT integration. It flows like this. Step 1, you just request a personalized quote right there in the chat. Step 2, you add your vehicles and review your drivers through a totally simple conversation. Step 3, ChatGPT instantly spits out your estimated monthly premium. And Step 4, you get a redirect link to their site to finalize the deal. The entire traditionally clunky insurance chain just got compressed into a 2-minute casual chat conversation. The massive industry implications here literally cannot be overstated. By moving the quote directly into the chat box, Liberty Mutual is entirely bypassing traditional human agents, they're bypassing traditional SEO, and they're completely bypassing comparison sites like NerdWallet. Keep in mind, OpenAI only just approved insurance apps inside ChatGPT in February 2026, and already a $50 billion carrier is testing the waters. You can bet for sure that industry giants like Progressive, Geico, and State Farm are watching the shift incredibly closely. So let's pull it all together. The big picture, mapping the new interface. And this brilliantly illustrates exactly what we've been talking about today. When we zoom out, these 3 distinct moves draw a completely new map of the consumer finance interface. The way we connect, discover, and purchase is just fundamentally evolving. Down at the base, we have the infrastructure layer, owned by companies like Plaid, fortifying payments, credit, and fraud protection natively. In the middle, there's the discovery layer, claimed by Klarna, moving product search directly into natural language AI. And right at the top, the distribution layer, where Liberty Mutual is bypassing those traditional middlemen to sell directly through chat. So, what does this all mean? Well, it leaves us with a pretty crucial, provocative question to ponder. What happens to traditional banks, human insurance agents, and massive comparison sites when the entire financial interface lives invisibly inside an AI chat box? The front desk of finance has been entirely rewritten, folks. Thank you so much for joining me for this explainer. Keep your eyes on the stack and keep learning.